Energy, the top performing sector in the S&P again today as oil prices continue to climb higher. Those stocks also dominating the list of new 52-week highs. Occidental, Devon Energy, Chevron, Marathon Petroleum, to name a few. Let's bring in Paul Sankey, Sankey Research President, to break down the moves. Paul, good to have you with us. How are you seeing oil prices and how they play out for the year and maybe even into next year?
Well, it looks like today we broke out to the upside. For those people who like to read charts, it looks like we broke the pennant to the upside. So that was a big move today. And this week, Russian oil officially should leave the market in terms of traders being able to buy it. We'll see what actually happens there. But there's actually more crude to come out of the market. And then, as you know, it's extremely tight on the distillate, the diesel side particularly, which pricing around $160 a barrel, $50 above crude prices. It's a pretty dramatic environment, not to mention $8 natural gas. So everything on fire at the moment.
Hey, it's Karen. Thanks for being on. So how long will it take till we see some supply response from the U.S.? I know the companies are probably a little timid given this administration's prior stance. So how long do you think it will take to see that supply?
I'm not sure how much difference the administration really makes. It hasn't been helpful with things like the Keystone and with the leasing. But the main thing that we hear is we're really looking for growth in the Permian, which doesn't really need the pipelines or the permits, essentially. The issue there is just we're dead short labor, almost no labor available, no steel, no cement. We had the president and CFO of Diamondback, Fang, that made an acquisition today on last week on a call with me, and he was just saying simply there's no ability to increase activity at the moment without simply stealing everyone from another company, which obviously would be hyperinflationary. So they're just not doing it. So the answer is that we're probably going to see pretty muted growth, both in oil and natural gas supply this year from the U.S.
You see Valero going to 150. It's like 127-ish now, Paul. Is that your top pick?
We loved it. That was the 110. When the stock was at 110, it sounded like a very high price target. But, we could go higher here with the way margins are playing out in Q2. So, yeah, we've really been top pick, as you know, from my previous experiences on the refining side. But then again, we're also calling for oil to be 10% of the S&P 500. So pretty much all of them, look attractive to us, essentially, relative to the market.
I'm sorry, you said 25% of the S&P 500 you think oil will be?
No, 10%.
Energy? 10%, okay.
But
25%, I thought that was a huge call. 10%, that's still a big call.
You could get there, but you'd need the S&P at 500. No, I think that would be too negative. We think you can just about get, with a very bearish shape for the S&P, you can push towards 10% of the S&P in oil. It was 14% at the peak in 08 and 30% of the S&P in 1979.
All right. Paul, thank you. Paul Sankey, Sankey Research. Guy Adami, even if we got to 10% of the S&P 500, that's a lot of dollars that have to flow into the sector from institutions.
This has been a theme that Tim's been on. Listen, Paul was on back in October. Marathon Petroleum, we talked about, as a $60 stock, made an all-time high today north of 95. Energy, oil prices could go sideways for the next 6 months. And these stocks would, I think, take that time to continue to grind higher based on that price. Valero, we've talked about forever. I agree with them there. All these levered names make a lot of sense. And I dig that whole beard mustache thing he's got going. He's like one of those whalers out of like a Winslow Homer picture. It's beautiful.
I just called him a whaler. Is that a compliment? By the way, we were talking about Valero and his way to play the diesel shortage. Long Valero, short trucking, and in this case, he's calling for a short Amazon. Tim, do you like that?
I think the market's not efficient enough for that pair trade. By the way, I've done a fair amount of pair trades in my career on things that I thought were fundamentally correlated, and I'm just not. I don't really like pair trades. Paul's a talented guy, and he's come on here with some really. And we pushed him into his short Apple, long Exxon. We made him a billionaire. So no, I think I understand what he's doing there, and I think the most important point about the sector, that's not just that it's underweighted and people, the dynamic of the S&P under pressure and the energy sector is going to get it there faster. But the 15 to 25% free cash flow yields. But then companies' balance sheets are so different. People on EOG, PXD, net cash. These companies have no net debt. I mean, it's incredible. And I think they truly understand whether it's 50 or 75% of how much they're giving back to shareholders each earnings period. And until that changes, I think people treat these companies a lot like the airlines. They don't trust them in the best of times because they always quickly get offsides. Let's see. I think this time's very different.